Tax season. For married couples, it always brings up that big question. Should we file our taxes together or should we file them apart? Now, most of us just check that jointly box and don't think twice. But today, we're going to explore that less traveled path, filing separately, and figure out if it might just be the smarter choice for you. Yeah, if you're married, I bet this screen looks pretty familiar. It's one of the very first things you have to decide on your tax form, and believe me, it can make a huge difference in your refund or what you end up owing. But what if the choice that seems so obvious isn't actually the best one for your particular situation? So, here's what we're going to do. We'll quickly go over the whole jointly versus separately question. We'll define what filing separately even means. Then, we'll get into the major downsides, and there are a few. But then, we'll uncover those key moments when it actually makes a ton of sense. And finally, we'll give you a simple way to make the final call. All right, first up, let's talk about that fundamental choice every married couple has to make every single year when they sit down to do their taxes. And it's true. The vast majority of couples file jointly. I mean, it's usually simpler and it often comes with more tax benefits. But here's the thing. Most doesn't mean all. The real question we're asking today is whether it's the best financial move for your household. So let's get into it. What are we actually talking about when we say married filing separately? What does that option even do? Well, it's pretty much what it sounds like. Instead of piling everything onto one single tax form, you and your spouse each file your own. Your income, your deductions, your credits, it's all split onto two separate returns. And just so you know, in the eyes of the IRS, as long as you are legally married on December 31st of the tax year, this is an option for you. Now, here's a little heads up. There's a special rule you have to keep in mind. If you happen to live in one of these 9 community property states, state law can actually chime in and affect how your income gets divided up, even if you file separately. So if you see your state on that list, you'll definitely want to look into the specific rules where you live. Okay, before we dive into why you would do this, we really have to talk about why most people don't. There are some pretty significant financial drawbacks to filing separately, and you need to know about them. And this is a big one. Filing separately often means you're just leaving money on the table. When you file jointly, the door swings wide open to a whole bunch of tax credits and deductions. But if you file separately, things like the student loan interest deduction or the child independent care credit, yeah, they're generally off limits. Poof, gone. And this quote right here, it highlights one of the trickiest rules of all. Let's say one of you has a ton of deductions, mortgage interest, state taxes, and decides to itemize. Well, guess what? The other spouse has to itemize too, even if they have basically nothing to deduct. You can't have one of you taking the easy standard deduction while the other itemizes. It's all or nothing. But maybe the biggest, most shocking downside, the one that really makes people pause, has everything to do with saving for retirement. Specifically, your ability to put money into a Roth IRA. Okay, just look at the numbers on this slide. The difference is absolutely wild. A married couple filing jointly can earn up to $212,000 combined and still contribute to a Roth IRA. But if you file separately and lived with your spouse at all during the year, that income limit just plummets to $10,000. For most people, that basically makes this incredible retirement tool completely unusable. So, I know what you're thinking. After hearing all of that, you're probably asking, why in the world would anyone ever choose this? Well, now we get to the really interesting part, the powerful exceptions that can make this filing status a total financial lifesaver for some people. Exactly. It's the perfect question. Why does this option even exist? The reason is, for a small number of people, in very specific situations, the benefits you get from filing separately can actually be bigger than all those negatives we just talked about. The first, and honestly the most common reason, is for anybody on an income-based student loan repayment plan. These plans figure out your monthly payment based on something called your adjusted gross income, or AGI, which is pretty much your total income minus a few key deductions. And this is where things get really interesting. If you file jointly, that monthly payment is based on your higher, combined AGI. But if you file separately, your payment might only be based on your single, lower AGI. For some couples, the savings every single month on student loans can be way more than any extra tax they might have to pay. All right, the second big scenario has to do with deducting really high medical expenses. This is another one of those cases where having a lower AGI can be a huge help. So here's how it works. You can only deduct the part of your medical bills that's more than 7.5% of your AGI. Let's imagine one spouse has $10,000 in medical bills. It is way, way easier to get over that 7.5% hurdle with a single, lower income than it is with a big combined joint income. Filing separately could unlock a massive deduction you wouldn't get otherwise. Okay, so we've laid out the good and the bad. How do you actually figure out what's right for you and your spouse? Let's walk through a super simple process. Step 1, just see if you're even in one of these special situations. Does one of you have an income-based loan repayment plan? Did one of you have a year with crazy high medical bills? If the answer is no, then filing jointly is almost definitely your best move. If yes, then the only way to know for sure is to actually run the numbers both ways. And if it gets complicated or you're just not sure, talking to a tax pro is always a smart idea.
So look, married filing jointly is the default for a really good reason, but it's not the only answer out there. For the right couple, in the right situation, taking a serious look at that separate option isn't just a random exercise. It could be the smartest money move you make all year. The only question left is, have you checked?